Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Tech Markets for Thursday, the 3rd of July. It is an unusual non-farm payrolls Thursday today, and that has come about due to the Independence Day holiday that we've got tomorrow. And markets in front of this payrolls report have just slightly consolidated. The Wall Street indices yesterday didn't really push on, and that came despite a very strong ADP employment report number that came out in the afternoon. The Wall Street indices couldn't really take that on board and push forward with it. The Dow hit 16,999 before correcting back slightly, so just under the 17,000 figure. The S&P did, however, just slightly make an all-time high once again, but these indices, as I said, were slightly consolidatory in front of this big payrolls report number today. You've also got a significant amount of data out throughout the day today. So fairly pensive opening to trading early on today. I'll quickly go into some of this data. We've got the, as I said, the payrolls report that comes out at 1:30 today. 212,000 now following that ADP report. The expectations have been slightly upgraded from 210,000 that I saw yesterday, the consensus. And it's now 212, and we're waiting to see how that goes there this afternoon. You've also obviously got the unemployment data with that as well. It's forecast to be in line with last month at 6.3. That would be 3 months in a row at 6.3%. Just as an aside, also just watch out for the participation rate. That's always an important piece of the payroll report. And also the number of people joining the labour force, which was surprisingly up fairly significantly last month. And the other thing is number of hours worked by employers as well. Employees, sorry, in the payrolls report. So a lot going on in that report that will be interesting for the market. Other than that, you've also got all the service sector PMIs today. You've got the UK coming out at 9:30, 58.3 is the expectation there. You've already had some of the Eurozone PMIs for the service sector. Spanish PMI, for example, missed expectations very slightly, but they'll be throughout the early morning today, and then into the afternoon at 3 o'clock. You've also got the US non-manufacturing PMI as well, 56.3, which it would be in line again with last month. The other big factor that we need to bear in mind today is you've got the Ecb Monetary Policy. That is at Mario Draghi coming out also at 1:30 with the press conference. There's no change expected on the monetary policy today at 12:45, but then in the press conference he's going to be talking about giving more information, I think, about the targeted long-term targeted LTROs, long-term refinancing operation, and he's going to give more information about how that's going to work, and the market will be certainly interested in that. So around 1:30 it could be quite choppy, these markets, with a lot going on today. Today we have also the dollar that has strong recovery yesterday, and that sort of continued into today in terms of the Forex trading. So the dollar is benefiting against pretty much across the board against the majors, with the exception of basically being flat against the euro and the Swissy. The big move is coming in the Aussie Dollar, which had disappointing retail sales overnight, and that has followed on from the disappointing trade data that we had yesterday. So 2 days in a row with a strong correction in the Aussie. So big move going on in that currency today. So that takes me to my chart of the day, which is the US dollar Loonie, which is showing signs on the long-term chart, showing signs of breaking this downtrend that we've been in for the last few weeks. Almost consistent sell-off there in the last few weeks, but that there's a downtrend that's been broken by a strong green candle yesterday. That's the first really strong candle that we've had throughout the last month, and that is now putting pressure. That's certainly that downtrend that we've been in for the past two weeks is now being under pressure. You've also had this RSI that's jumped up, and it's not far from a buy signal. If it crosses back above 30, that would be giving a buy signal on the RSI. These stochastics and the MACD lines are not yet really improving, so this is very early days of any potential recovery, but I thought it would be quite interesting to focus on it, considering the Loonie had been so strong against the dollar recently. There's, as I said, there's just initial signs of a bit of a retracement of that move. On this intraday chart, you can see this in further detail. That is the big downtrend that we've got going on over the past 2 weeks, and it's just, as I said, broken that, and it's sort of now trying to, well, it is trading around and above that 89-hour moving average, which had basically capped the gains on the Loonie for the last 2 weeks, and it's now starting to starting to bottom out as well, which is interesting. I think a buy signal possibly on this Loonie would be on a move above 107. That would be confirmation, I think, of a recovery. But at the moment, as I said, we've just broken that downtrend and we're starting to possibly think about a recovery. In the last few minutes, though, the Loonie has strengthened against the dollar once again. But I think that it's likely that it'll settle down as the session moves on towards non-farm payrolls, and we'll see how that goes. But certainly the momentum indicators have picked up in the past day or so, just with the RSI and the MACD lines above neutral. So there are signs possibly of an early basis of a recovery in the Loonie, and perhaps in the dollar Loonie, and perhaps it is one to watch in the coming hours and days. Anyway, I wish you good luck in your trading on the dollar Loonie, and whatever you choose to trade in front of non-farm payrolls. Don't forget that there is, or does tend to be, a fairly volatile trading around the announcement of non-farm payrolls, so that could have a big impact on the charts today. And I will wish you good luck and speak to you later. Thank you.